Welcome to your Essential Business Briefing. I'm Stephen Carroll. Coming up, what hopes are there for a recovery from the coronavirus recession? We'll examine the OECD's latest forecast with their chief economist. Will demand for oil ever return to pre-pandemic levels? And what will that mean for consumers and producers? Plus, we'll meet the French winemakers making tough choices to survive a difficult 2020. The world's economic output collapsed in the first half of this year due to the coronavirus pandemic. The recovery has begun, but the Organisation for Economic Cooperation and Development has warned the bounce back has lost momentum in recent months. The OECD's latest forecast is a slight improvement on the picture that it painted in June. It now sees the global economy shrinking by 4.5% this year. The United States is expected to contract by just under 4%, and the Eurozone by almost 8%. The situation for France has improved somewhat, but a slump of 9.5% is still on the cards. While the situation looks bleaker for India, its forecast downgraded to a 10% plunge in GDP. We can speak now to the OECD's chief economist, Laurence Boone. Laurence, this is an improved picture compared to your last forecast, but of course it's still a major economic crisis. What's been the change in the picture since June?
So the picture has been revised slightly, but it's still, the world economy is still contracting by 4.5%, which is, one of the deepest recession, if not the deepest recession since World War II. And the main characteristic of this outlook is the unprecedented uncertainty that's still with us. So as we look ahead, the recovery will be very, very gradual, and policymakers will still have a lot to do. And I should say that during the first phase of the crisis, they've been absolutely fantastic in implementing very large and very rapid support, which also helped to buffer the shock in 2020.
Are you concerned that governments might cut that supply off too quickly, that they might stop that extraordinary support and perhaps send things in the other direction?
Yeah, so there are effectively a few recommendations we're trying to make with, humility in this uncertain world, and one is not to reproduce the mistakes of the past. And that includes what happens with fiscal tightening. So what we're saying is, we still need support. It needs now to be better targeted to people so that they get the training they need, and that hasn't always been the case in the past, and to firms so that their balance sheet can be consolidated when they have a future so that they can invest, and that will be key for the recovery.
You're also looking at the furlough schemes in this report, which has been a huge factor in maintaining people's incomes in certainly parts of continental Europe. You're saying that it needs reform, though. What should governments be doing when it comes to furlough schemes?
So in the first phase of the crisis, these schemes were very large and applied to all firms, usually without discrimination. Now we're entering this very delicate period where some sectors will be hampered for a long time, but others will be thriving, like health, pharmaceutical, or digital. So governments need to help people to move away from the impaired sector into the new one. But these transitions are difficult. So what we're saying is two things. First, try and modulate the parameters of these schemes depending on the sector. And second, make it conditional on training, help people help themselves finding a new job.
We've seen many governments unveil stimulus plans for the economy. France, for example, 100 billion euros just recently announced. Are governments, generally speaking, getting it right when it comes to these plans?
So for the first part, I think governments generally got it right, and they learned the lessons from previous crises, and they've been amazing throughout. Now the next phase is more difficult. We are seeing some of the recovery plan taking shape. And what worries us, what's really a concern, is that very few of those plans actually have commitments towards greener investment, greener infrastructure. And it looks like we could be repeating the mistake of the past crisis of not seizing this opportunity for change.
When we spoke last, you said that it was the young and low-paid workers that were going to be worst affected by this crisis. Is that still the same situation, and has there been any improvement for their situation?
Well, if you look at the sectors which are where physical distanciation is difficult, that's restaurants, festival, nightclubs, things like that. They represent about 13 to 20% of total OECD employment. That's a lot of people. And for these people, working condition will not be the same, their working hours will not be the same. So we really need to target better what we do for them. That hasn't been done so far. And policymakers need there to be a bit more creative and innovative. They must be the one who have access to support, to training, to very flexible support so that they can work, train, and move on.
There is a difference in your forecast between the situation for developed and developing economies. And particularly the case of India, quite a significant downgrade in your forecast. You're predicting a 10% contraction this year now. What's happened with India?
Obviously, the virus is even tougher for emerging market economies. First, usually their health system is not always up to the standard of the advanced economies. One. Second, confinement is very difficult with a large share of informal worker for which, the social safety net doesn't exist. And third, the density of population of people living in precarious conditions, we know play a very large role. So this virus is very unfair and is hitting harder those who are living in less good conditions.
Do you have a note of optimism in this report, something that you think that will end up being a positive factor as the economies emerge from this crisis?
So I think we should have two notes of optimism at least. Once global cooperation for vaccine research is really gaining some momentum and represents a large amount, so we may have hope there. And the other thing is policymakers have done a very good job in the first phase of the crisis. We hope that they will be able to do another one next. And the last point, I think, which is super important, this is the time for change. This has been a very loud alarm bell, and I hope policymakers will seize this opportunity for real change this time.
Okay, Laurence Boone from the OECD, thank you very much for joining us. Now, a major oil company says the pandemic has brought us to the point of peak demand for oil. BP's Energy Outlook outlines 3 scenarios for the oil industry, 2 of which see the peak in 2019 and the other in the coming years. That's significantly earlier than the company's previous forecasts. BP says if governments set stricter targets for cutting carbon emissions, demand for oil may never return to pre-pandemic levels. Kate Moody's here with more on this story. Kate, what exactly has the pandemic meant for the demand for oil?
Well, Stephen, demand is still extremely low. OPEC and the International Energy Agency are among those slashing their forecasts for global demand. There are a number of factors at play here, including a slowdown in manufacturing and shipping, a collapse in air travel, and more people working from home means less commuting. That's having a meaningful impact on demand for transport fuels. The IEA describes the outlook as more fragile than ever.
So what does all of that mean for the price of oil?
Well, let's take a look at a graph of prices for the last year or so. In September 2019, a barrel of Brent crude oil, which is the international benchmark, was trading over $60 per barrel. You can see the collapse towards $20 in the spring as lockdowns were imposed around the world. Prices have recovered about half those losses now. There's a similar trend for US WTI, which briefly dropped into negative prices in April, meaning it was more expensive to store a barrel of oil than it was to buy. Now, storage remains a huge challenge because demand is so weak. Morgan Stanley says there are 600 million more barrels being stored now than a year ago, and traders have been buying up space on floating oil tankers.
So what about consumers in all of this and those countries that produce oil?
Well, initially we saw the likes of OPEC and Russia scaling back their output, although there has been a slight uptick recently. Refineries are slowing their operations, and Saudi Arabia even slashed its official selling price to try to tempt more buyers. Dozens of small oil and gas companies have filed for bankruptcy. In North America, filings in the sector are up 62% this year. The upside for consumers is that petrol is generally less expensive at the moment. That is, of course, if they have somewhere to go.
Okay, Kate Moody, thank you very much for that. The French wine producers are hoping that the traditional September sales and trade shows will help to make up for revenue lost during lockdown. The closure of bars and restaurants had sent sales tumbling. That's led to difficult decisions for some winemakers, as Alison Sargent now reports.
The first snip of the season for these vines in southern France.
Joli raisin. Oui, joli raisin.
Winemakers say this year's vintage will be an exceptional one. Still, the owner of this vineyard is not optimistic about the coming months.
On est à la fois anxieux et inquiet. C'est la reprise du Covid et de ce fait, de nouveau un deuxième impact qui risque d'être extrêmement lourd pour nos entreprises dans l'appellation Corbière.
With 40% of this year's profits already lost due to the pandemic, he was hoping to make some of it up during the season's annual wine fairs, events that now may not take place.
Ça va être un handicap énorme, à la fois sur le plan personnel et sur le plan commercial et financier. Un chiffre d'affaires en baisse, effectivement, lié à l'annulation des salons.
Concerns shared by all of France's winemakers. In the eastern region of Alsace, the Borès family decided in the spring to sacrifice some of their fruit to limit production.
Disons qu'on produisait trop par rapport à ce qu'on vendait, donc forcément les prix chutent et ça crée une tension. Voilà, il faut s'adapter.
Adapting to avoid a situation like this one.
Donc vous voyez là, on a encore 4 cuves pleines de la récolte 2019.
Unsold wine that's taking up space. Part of the stock was already sold to a distillery and transformed into hand sanitizer thanks to government funding. Wine that was sold for 5 times less than its market value.
Donc on est plus à 78 centimes le litre au lieu de 3-4 euros, quoi.
Faced with the uncertainty, winemakers have been rushing to come up with creative solutions, like expanding online sales and offering home deliveries, ensuring that their families won't go hungry and that wine lovers won't go thirsty.
Well, that's it from us for this week, but you can watch all of our previous programmes back on our website, france24.com. And as always, we're on social media if you want to get in touch with your thoughts on the stories we've been covering. Until next time, thanks for watching.